Hi there, we're back. Looks like you guys lost us for a minute with a poor connection. So we're going to go back to the tax breaks that Mary was talking about, and then we'll wind it up.
Okay, sounds great. So I'll run through those quickly. Again, there were three. The first one is the ABLE Financial Planning Act. And what that does is it allows you to roll over from a 529 into an ABLE account now up to the $15,000 cap per calendar year. The beneficiary has to be the same individual on both accounts or a family member of the other. So brother, sister, that type of thing. Also, the Able to Work Act is fantastic for someone who's working. It allows them to contribute over the $15,000 cap if they're working. It's based on their adjusted gross income, whichever is less, either their adjusted gross income or the federal poverty line for an individual, one person, which is now $12,140. So which either of those two incomes is less, they're able to contribute that lesser amount plus the 15, so potentially up to $27,000 tax advantage, which is huge. The only criteria to take advantage of the Able to Work is if you do that, you can't participate in your employer's retirement plan if they have one. You can't do both. But it's a great benefit if you're working with a disability to be able to contribute over that $15,000. And then lastly, the last one is the Savers Tax Credit, which exists for retirement savings, but now exists for ABLE account beneficiaries. And what that is essentially it's a tax credit that you can take based on your contribution to your ABLE account. There's some criteria to be eligible. You have to be 18 or older. You can't be claimed as a full-time student on another person's return. And you can't be, you have to be 18 or older, not a full-time student, and you can't be claimed as a dependent on another person's return.
Okay.
And essentially what it is, it's a tax credit. Again, it's based on your income, and it's a 50%, 20%, or 10% calculation on your credit, on your contribution rather. So if you put in $2,000 and you were eligible for that 50% credit based on your income, you would get a tax credit of $1,000, 50% of $2,000 being $1,000.
Okay. So thank you so much for coming. And we're going to put in a wealth of resources in the comment section. So we will try to connect you to everything that Mary has talked about today. And if you have questions, please direct message us. And Mary and I will do our best to get back to you with questions. Mary's also doing a webinar for the ARC tomorrow at noon that you can register for and get more detailed information. And if you're a visual learner, you can listen here, but you might benefit from, seeing some things visually. Is there anything else you'd like to say to wrap it up, Mary?
Just to reiterate, if you want to open an Attainable account, you're going to go to fidelity.com/attainable. You can do it over the phone. I'll just read that number. It's 844-458-2253. And you can also go to Fidelity has investment centers throughout the state to answer any questions. I am so passionate about being a resource for people. So if anyone ever has questions, please feel free to reach out. We're going to share some great resources that I given to Nancy that they'll post that are just great for people around, benefits, Social Security information. They have a lot of information around ABLE. So,
yes.
I'm excited to, share those with people. And thank you so much for having me. This was great.
Thanks for coming.
And I love what I do, so I'm happy to always be a resource for people. I get how challenging it is to find answers and questions, answers to questions people might have. So yeah.
Great. Thank you for coming. And thank you for joining us. And we'll be back next month. Thank you.
Bye.